What is up, everybody? It is Wednesday, July 13th, 2016, around 10 p.m. Time for the market analysis video. Had a lot of trouble with data today, so just working through that, but we got most everything in. I'm going to continue to work on it probably after this video, but we're here. Time for the market analysis video. So today was an interesting day. We opened up higher and then sold off pretty much throughout the day, flirted with negative territory several times on the S&P, and closed right on unchanged. I don't actually remember. If I look here, what do we see? We see, 1 penny lower on the day. So it was interesting. I have been talking about, my last video I talked about kind of a topping pattern, whether that's a rounded out pattern or whether more of a jagged straight down. It was an interesting day here, low volume, not a whole lot of selling pressure, but just buyer exhaustion. So it'll be interesting to see what happens tomorrow. Certainly today would make you think that it's more of a rounding out. I still expect us to at least test 210 and possibly go down to 208, 205, or this 50-day here. Yeah, it was right around 208. And some of that will be dependent on earnings. So one of the things that I've failed to mention in some of my previous videos is that earnings season is about to be upon us, which is a major reason why my strategies haven't signaled any trades lately. I avoid earnings trades because both technical analysis and fundamental analysis is difficult when companies are reporting earnings. Doesn't mean you can't do fundamental analysis and make a play specifically on earnings, but that's not what I do. And technical analysis is difficult before earnings. I think if you want to play earnings, you should do it based on some kind of knowledge that you feel like you have of the industry or the companies, or if you're looking at options volume and you feel like you see someone come into the market with information and buy a lot of options or something like that, of that nature, you want to piggyback on someone else's trades in the option market, you can do that. Otherwise, I say stay out of trading companies that have upcoming earnings or earnings that are in your trade window. So we are going to be kicking off, I think, with some of the banks. So that might set the tone. That could also set the market lower, really. Usually there is a bit of chop during earnings as data and news is suggested. I'm sure that Brexit will be brought up in exhaustion, especially for the larger companies and the banks. It'll be interesting to see if the banks talk about cuts, job cuts, and how the market will react to that. So that's one of the major things going on right now. In the midst of all that, Britain is still working through the Brexit and the new prime minister, all of that stuff. So all that being said, my predictions, or what I'm looking for in the SPY, is still true. I'm looking for it to roll over in some kind of way down and pull back from this pretty impressive rally, post-Brexit rally here. So we'll see what happens there. In the gold market, we had a recovery off of kind of a large selling day, still on very low volume, which is interesting. Basically, I would take that to mean when you have a large volume day and then an up day after it on very small volume, so a large volume down day and then a day where it goes up on considerably lower volume, sometimes that can mean that sellers came in and then got exhausted, and so any buying moves the price up. It'll be interesting to see if that's the case with gold. I suspect that's the case. We did enter that 127, 120 area there for GLD which this zone right here, 127 to 125.30 or something like that, I would think would be supportive, and that there's a lot of buyers that would come in at this level. So if we do dip into this range, I expect that to be bought, and gold eventually to move higher. So since the beginning of the year, since December, I think this is the start of a large bullish move in progress after being really taken to the woodshed for an extended period of time. Gold, I think, is on the way up. I've been talking about this almost maybe relentlessly, maybe too much on these videos, but that's really where I see moves coming, especially in this low interest rate environment that is for the foreseeable future. It'll be interesting to see what the Fed says and so forth, what they talk, the individual Fed members and Yellen and some of the data, what they choose to say in their next meeting. But basically, the U.S. dollar is the only currency that looks like it may still be looking to raise rates, although I don't think that's likely at this point, and I don't think the market does either. But gold recovering off of that large down volume day. Speaking of the dollar's still hanging in there at these highs. It'll be interesting to see if there's any selling at all can be established in the U.S. dollar. But again, with what I was talking about earlier, with the way that the dollar stacks up against the major currencies, I think it'll be hard for any selling pressure to be sustained short of a large bull rally where full risk on or full on riskier assets are bought, and that would obviously transition people out of the U.S. dollar and into equities. But short of that, I don't really see the dollar having any considerable sell-off at this point. Looking at oil, so I'd been talking about how I thought oil was going to go to 45 and then bounce back. It went a little bit lower, did bounce back, and then came back down again today to right around that $45 a barrel level. Again, I still think, this was a constructive, although kind of tepid up move. I think there's a lot of work to be done in oil. It's fallen pretty hard from the $100 a barrel that it used to be at, and I think we had this long, somewhat mild upswing, and now we're having a bit of a correction from that. I think this is just a correction of the upswing, and that we move higher from here in the long term. How long we go before we really get a major upswing is hard to say, but I would be constructive oil, even in the midst of maybe any economic concerns, Brexit, and so forth. I'm not really sure there's much more bad news to be had from the oil perspective. So we'll see how that goes in the long term. But this could be a buying opportunity in oil here. It could have one more leg down, but that's currently not my main view. Obviously, if it goes past a lot of this support here, if we're looking here, it's at a major support level right now. So if it were to break down through that, and then the next level would be at right around 975, something like that. If it breaks through that, then you have to consider, okay, maybe it's got another leg down to go. But even if it goes down past that, I'm not sure how much further it can go, really, short of crisis. So looking at that, the financials, so had also another topping candle here, possibly. They have earnings coming up in the very near future, so it'll be interesting to see how the market responds to that. And again, European stocks as well, European banks as well, a little bit of a sell-off here they'll also probably respond to U.S. banking, whether or not the actual earnings numbers, certainly the conference calls and what they talk about. I would guess they would respond to that. But it's something to monitor and keep an eye on. There's going to be a lot of earnings data coming in, so I would be careful about that. And as far as trading individual companies, if you're not into earnings trades specifically, I would sit on your hands on any companies that have earnings coming up and play them smart. And good luck. God bless. Great trading. Thanks.